Hey guys, there's a weekly forecast for January 16th through the 20th of 2023. Okay, so this week we'll be covering a new weekly bias on the pound dollar and an update for the weekly bias on the Nzdusd pair that we've been covering. Okay, and moreover, be sure to check out the section where I explain what's been happening on the pound dollar for the last 2 years, for it's going to give you a better sense of biases in general. Alright, so let's start off with the pound dollar. Okay, this is a monthly chart. We'll start off with an overview. So since this horizontal trend line that's attached to this pivot right here just became legitimate with this 3 touches at 1, 2, and 3 right here. And since price has the tendency to want to test strong levels, in the long term I'm long biased right back up to this pivot high right here. And moreover, on the weekly chart, there was a short trade that formed in this area last month and a long trade that formed right here this month. And I'm still waiting for the lower time frame confirmations to confirm which trade is stronger. So in the short term, I'm neutral biased. Okay, let's talk entries. Okay, this is a weekly chart. Let me run you by what's been happening on this pair for the last 2 years. So back in November of 2021, there was a long trade that formed right here. Then a couple of months later, at this point right here, there was a short trade that formed. And this long trade seemed to be stronger than this short trade, so the weekly bias was long. Or in other words, price is likely to reach this pivot high before reaching this pivot low. However, about a month and a half later, as price ranged right at this point right here, this weekly bias was reversed into short, for its main target was hit at this point. And so at this point, since the bias was reversed into short, price was now likely to reach this pivot low before reaching this pivot high. And that main target was hit right here 3 weeks later. Now, if you recall, I was mentioning right at this point right here, there's a lot of strong short strength created from that new target that was created through a strong monthly trend line. Okay, so even though this weekly bias's main target was hit at this point, price continued down all the way down to these levels. Well, there was actually another new long trade that formed. However, still, the strong short strength created at this point overrided this long strength. And so the weekly bias was still short. Or in other words, price was likely to reach this pivot low before reaching this pivot high. And then after a small pullback, price came down to hit that main target. Okay, and the same thing happened again. A long trade formed but was overridden and its main target was hit here. And another long trade formed but again was weaker than this short trade up here. And its main target was also hit right here. Okay, and as price fell all the way down to these levels here, really to price levels that this pair hasn't seen for about 20 years, a new long trade formed right here. Okay, so at this point, this new long trade was measured against this short trade way up here from January of 2022. And so the new risk parameter was between this pivot high and this pivot low. However, for about 2.5 months in this area right here, there was no lower time frame confirmation to confirm the direction of this bias. Okay, so this pair was literally untradeable, for there was no new lower confirmations that formed for this new bias for about 2 months right here. Okay, however, last month, right at this point right here, there was a new short trade that formed. And just last week, a new long trade formed right here. Okay, so the risk parameters is between this pivot high and this pivot low right here. Now, the first thing you want to do when figuring out whether a bias is long or short is to measure the strength of this short trade against this long trade. Okay, so let's go ahead and do that. Let's go over to the monthly chart. Okay, so on this monthly chart, that weekly short trade formed in this area right here, and that weekly long trade formed in this area right here. Now, in terms of short strength for that short trade, there's this mini gap right here, and more of this small gap right here, both providing short strength. Okay, however, since that weekly short trade is running right into this small gap right here, we're going to have to subtract some long strength from that short trade. Okay, so let me go ahead and show you the price levels for these gaps. Okay, so the upper level for this mini gap is at 1.2353. The lower level is at 1.2337. And the upper level for this small gap right here is at 1.2328. And the lower level will be at 1.2272. Okay, and the upper level for this gap right here is at 1.2164. And the lower level is at 1.2135. Okay, so seeing that the total width of both these two gaps is bigger than this small gap right here that's providing long strength, that weekly short trade has a little short strength in it. Okay, and moreover, in terms of that weekly long trade that formed right here, there's actually no price elements that's providing long strength. Okay, so going strictly from these price elements, there seems to be more short strength for that weekly short trade than long strength for that weekly long trade, and thus that weekly bias seems to be short, or in other words, price is likely to reach this pivot low before reaching this pivot high. However, the lower time frame confirmations always have the ultimate say in terms of biases, so let's go ahead and see what's happening over there. Let's go over to the 4-hour chart. Okay, so on this 4-hour chart, that weekly bias's risk parameters is between this pivot high and this pivot low right here. So in other words, that weekly short trade formed in this area, while that weekly long trade formed in this area right here. Okay, and moreover, in this case, I'm willing to take both short and long trades because there's no decisive overarching strength in either direction. So at this point, the only lower confirmation that seems to be forming is to the short side. So try drawing this trend line from this pivot to this pivot right here. Now price could fall down to this trend line, break it out, and immediately break back in to confirm normal long strength. But if price could fall right back down to this pivot low, that will create strong short strength and confirm that weekly bias to be short. Or in other words, price will reach this pivot low before reaching this pivot high. Okay, so if we get that confirmation of strong short strength, I will be willing to take a short entry. But that said, I will need a pullback to minimize the risk. Okay, so since the stop loss, if we have a short bias, will be at this pivot high right here, which is about 1.2445. If this short bias is confirmed by this lower confirmation, if price pulls back roughly to the 1.23 to 1.2345 levels, roughly around here, I will be willing to take a short entry with a stop loss at this pivot high and its main target right here. Okay, so the risk amount in terms of pips will be about 100 to 150 pips stop loss. Okay, and also remember, the reason why my stop loss is about 100 pips is because there's no definitive overarching direction on this pair to begin with. So in other words, if there were to be some strong signs of overarching short strength on this pair, I will be willing to take a bigger stop loss. So for example, a 200 pip stop loss. All right, but we'll just have to see what happens with this pair, and I'll keep you guys updated. Okay, so let's go on to the NZD USD pair. Okay, and if you're having trouble understanding what I'm talking about in terms of weekly biases and lower confirmations, please check out my forecast manual, which is an instruction book that lets you better understand these forecasts. So if there's a term or a concept you don't understand, you could look it up in the manual. Okay, and the link for that is in the details section of this video. All right, this is a weekly chart. Let me run you by the current setup I was looking at. So the last weekly long trade that formed was right here. And the last weekly short trade that formed was right here. So the weekly bias parameters is between this pivot high and this pivot low right here. However, as you guys know, I've been waiting for lower time frame confirmation to form on this pair to confirm this weekly bias, whether long or short. And at this point, there hasn't been any lower time frame confirmation yet. However, let me update you on what I'm looking for in terms of lower confirmation. Okay, so let's go over to the 4-hour chart. Okay, so on this 4-hour chart, drawing these two trend lines from this pivot to this pivot right here, and another from this pivot to this pivot right here. Now this week, price has just been ranging, which is pretty common for the new year. So there were multiple times that confirmation could have formed, however, it barely didn't. Now, first of all, in terms of this upper trend line, there was a breakout. However, on the next candle, price tried to break back in, however, was rejected. And in terms of this lower trend line, price actually opened under it at this point right here, making this trend line for lower confirmation not legitimate at that point. Okay, so the ranging about during this new year is causing these lower confirmations to not form at this point. However, there is one new trend line I'm looking at. Okay, and that's from this pivot to this pivot right here. So again, the price could fall down to this trend line and break it out and immediately break back in, confirming normal long strength. However, short strength can still come down to override that normal long strength. That's going to create strong short strength and confirm that weekly bias to be short. In which case, I'll be willing to take a short entry also. Okay, however, in this case, that weekly bias's main stop loss level is at this pivot right here, which is at 0.6512. And since there's no definitive overarching strength on this pair also, I'll only be willing to take a 100 pip stop loss. And so if this strong short strength forms, confirming that weekly short bias, I'm going to need a pullback right up to these 0.6412 levels around here for a short entry with the main stop loss at this point and the main target way below on that weekly bias's long trade pivot low that I showed you earlier. Okay, so we'll just see what happens with this one also, and I'll keep you guys updated. Okay, so just to clear up some confusion, let me explain the major difference between a bias and a trend. Okay, so a bias gives the trader 3 basic things. Okay, number 1, a bias tells the trader the future direction of price. Okay, so it tells the trader whether price in the future will go up or down. Okay, number 2, a bias gives you a precise target level. Alright, so in other words, it tells us how far price will go in the predicted direction. Okay, and number 3, a bias gives us a precise stop loss level. Okay, so a bias also tells us how far price will not go in the opposing direction. Alright, and on the other hand, a trend only gives us the future direction of price. Now, if you're an investor or a trader with a lot of startup capital, a trend trading may suit you because there's no need to use leverage and you're able to financially withstand paper losses before taking profit. However, if you're like the most of us where starting capital is limited, biases are the better choice in terms of strategy because it allows us to increase our stakes while simultaneously decreasing our risk. Now, the reason why biases are able to do this is because we have precise and clear-cut targets and stop loss levels. That allows us to calculate before entry the risk and reward of each trade with precision, which gives us the option to increase or decrease the level of leverage on each trade. Okay, and if you have any further questions about the difference between a trend and a bias, please leave it in the comments section. Okay, so I hope you guys have a great week, guys, and thanks for watching. Okay, bye.